Good afternoon, all pre-market prep viewers. I am Hayden Buckfire. If you do not know me, I'm something between a summer intern and a contributor here on pre-market prep this summer. I am joined by Gene Munster this afternoon. He is the managing partner of Deepwater Asset Management, formerly at Piper Jaffray, which was now Piper Sandler. Welcome, and Gene, nice to see you.
Awesome, Hayden. Pleasure to be here.
Thank you for coming on. So, Deepwater Asset Management, you're mostly focusing on tech companies. So what particularly drew you to the tech industry?
Hayden, I have an intense curiosity. Since a kid, in elementary school, my nickname was the Riddler because I'd ask so many questions in school, just loved to learn. And I don't think there is, or I think the best place to learn and to explore your curiosity is around technology because, of course, just the pace of innovation. And so that's been kind of, I think, the driving force for what was my career at Piper and my calling at Deepwater. Very different, the difference between a job, a career, and a calling. But the central thread through all that is my curiosity, and tech has been a piece of that. And so I have had the benefit of kind of steering that curiosity into a good place. And so that's why I've been investing in tech for a long time.
All right. So your Deepwater Asset ETF has been up 10% over the last 3 years, while some competitors or alternatives, like, for example, Cathie Wood's ARK ETF is down substantially. What can you attribute to that performance, and will it continue into the future?
So the Innovator LOUP ETF is focused on frontier tech companies. And those companies are companies that are going to transform how we live in the next 3 to 5 years. And many of those companies we've never heard of because they are still emerging. And I think one of the pieces that has differentiated our ETF, the Innovator ETF, relative to some of the other ones out there is we are visionaries, but we also have this earnings, this valuation discipline that has helped us when the market was so difficult last year for a lot of these tech companies. And so at the most basic case, that has been our differentiator, focusing on these transformative companies with an eye towards valuation. And another beautiful part about what our Frontier Tech ETF does is it has the ability to change the focus and when areas start to emerge. So there may be some segments of technology that emerge in 2 or 3 years from now that we can add that segment. When we launched in 2015, AI was one of the big, in 2017, when we launched the ETF in 2017, AI was a big theme. It's going to continue to be a big theme, but there will be other themes that will emerge, and we want to be able to capitalize on those.
So how do you identify these companies within the 3 to 5 year window?
At Deepwater, we invest in both private and public companies. And so the central piece is our research. This is what we've done for so long. And the core team, there are 5 members that have an average of 17 years of experience investing in growth companies. And the process of identifying that starts with a daily meeting. And at that daily meeting, we discuss which themes and which companies are impacting how we see the next 3 to 5 years. And so if somebody in that meeting identifies a company that could be potentially a mega cap, that wouldn't fit into the ETF because there is a maximum of $200 billion market cap on the ETF. But if during that conversation we identify other companies, like for example Nubank. Nubank is a bank in Latin America, rapidly growing. It really is changing how people bank. A largely unbanked population is getting access to a lot of the same financial instruments that we've known for so long in the United States. But that would be an example of a company that we identify and can pursue with the ETF. So the core theme here is we want to get it right. We want to get the themes right. We want to get the companies right. Once we've identified those themes and companies, we find which products for us to put those into. And that's how companies get into the ETF.
Thank you. So you can follow Gene on X at Munster_Gene. And talking about X, which was formerly Twitter, of course, Elon Musk acquired it last year. We've had a while for it to marinate. And what do you make of the acquisition? Good move or bad move?
Well, it's been a bad move financially. It's probably been a bad move from a use of his time. And we'll see if it ends up being a good move if this new X platform concept starts to take hold. And I think that even if it does take hold, he probably could have accomplished as much or more just starting from scratch versus bringing some of the legacy Twitter along. I think he's been clear about this, that he wanted to acquire Twitter and then did not want to acquire the company, and then ultimately was forced to do so. And so I think when you put all this together, what's the valuation? What's it currently worth? It's probably somewhere in the 25 to 30 billion, and paid just above 40 billion for it. So I think that is kind of speaks to how this is going so far. And I think that there is still this piece around a new level of competition that is starting to emerge with threads. And it's worth pausing for a moment and just assessing what threads means. Threads had a fast start, 100 million people tried it out within the first few weeks. Fastest growing product ever. The amount of engagement has declined since then. We'll call it, I keep wanting to call it Twitter. I'll stick to what it's called today. X is, call it 300 million, 350 million daily active users, something like that. So Threads made a sizable amount of progress in a short amount of time, but I think this is why something important to the question of how is this going for Elon. A year ago, he didn't have Threads. And ultimately, I think that as this real-time social platforms continue to evolve, I think we're going to get more tribalism within that. And I think that you're going to see kind of a split between the left and the right. I think the left is probably going to drift towards Threads, and the right is probably going to drift towards to X. And I think probably the combination of those, you're still going to probably maintain a number of users, a greater percentage with X. And so probably they end up losing, X ends up losing 20 or 30% of the engagement over the long period because of this new competition.
So you do see Threads as a long-term competitor to Facebook, as almost an equal or different?
Yeah, not quite an equal. I mean, I would kind of think loosely that this is 2/3 is going to be X in terms of the engagement and this type of social media, and probably 1/3 Threads longer term. And I think that it comes back to this tribalism piece. This is something that we've seen emerging for the past 6-7 years. We hear about it a lot in politics, but it impacts many aspects of our lives. It impacts school selection. It impacts social groups that people want to spend time with. And ultimately, most people want bias confirmation. They want to, what their beliefs are, they want those beliefs to be reinforced in what they watch and what they read and who they spend time with. And in the case of Threads, it creates an opportunity for some of those more kind of left-leaning biases to be in a similar type of community, and conversely, X will kind of play to the right. So that's why I see this as kind of an important time, is this tribalism piece, and that dynamic around people wanting to spend more time with their beliefs, I think is going to only increase when it comes to a world powered by generative AI. I think that the distinction between truth and what is true and what is false is going to become progressively more blurred, which is probably going to create more division, which is going to set up well for Threads in the future.
So of course, Elon changed the name from Twitter to X, and he's used the platform mostly to speak and tweet constantly. Do you think that his acquisition was motivated more by self-indulgence, or maybe a true financial outcome, a good financial outcome?
I think he wanted to, I think there's something even more important to Musk, and that's first principles. And this is something that the basic concept is, since something has been done a certain way for forever, that doesn't mean you should continue to do it that way into the future. And first principles comes across, I mean, the most obvious example of that is what's going on just with Tesla. The reality when he joined Tesla, it was because the first principle is that cars shouldn't be gassed. They should be electric for a lot of reasons. And then SpaceX, another kind of first principles approach, when a lot of the space exploration had been and basically stalled out. And I think when it comes to Twitter and X, the reason why he did it is first principles. I think he wanted a platform for free speech, and he felt that this was his opportunity to do that. And I think that's probably front and center at why he did this, why he ended up finding a way to go through with this. And I think the financial considerations and return on the investment is probably second or third on his list in terms of importance. In his view, if he can change the way that people have conversations, then that is a win, and he'll figure out ways to make money from it. But obviously there's a lot going on in terms of how these conversations are playing out, how people are engaging in these platforms, and the thought of figuring out how to make money is kind of a distant thought at this point.
Yeah, I want to talk about artificial intelligence, which is a huge focus of your newsletter, and also, of course, the companies that you're investing in. And of course, when any new technology emerges, there's going to be a lot of players on the scene. In the long term, some of them will be hugely successful and some will fizzle out. And what will determine the long-term winners and losers in artificial intelligence?
So taking a step back, is in 2017, when we launched Deepwater, the manifesto outlined 4 key themes for what we saw as transformative tech, and artificial intelligence was one of those. And from 2017 to the mid part of 2022, that topic was really a distant memory for just was outside of the sweet spot of what investors were thinking about. And then, of course, last year things changed, and now we have this as a consumer level product that has created a lot of hype for some companies, a lot of demand for others, like NVIDIA, and has begged the question of what does this ultimately mean for our lives, and what does it mean for the companies that kind of shape those lives. And so I'll start first of all by saying the amount of hype around AI is not the same level as the hype that came at the dot-com boom. I was around, I was investing, I was working at an investment bank at the time, and I would describe that as anything that touched the internet went up by a lot. And in this case, there's really a handful of companies when it comes to AI that have been impacted. The broader markets have not been impacted. So I think kind of as a starting point, when we think about the hype related to AI, it's important to note that this is not at the same level that we had 25 years ago. I think a second piece is ultimately what is going to be the impact. And while there is a lot of optimism around AI, I think the ultimate impact on our lives will exceed that optimism. And when we think about the contours of that, we have to kind of anchor into what are the ways that the world is going to be impacted by AI, and let's say in the next 3 to 5 years. We'll put maybe a more realistic time frame. And the first thing that's going to happen is we're going to see the concept of truth is going to go away. We've already discussed that. Don't need to talk anything more about it, but there's opportunities to make money around that. One may be investing in Threads, for example, or in Meta. A second big theme is just going to be some of the service related jobs are going to be more automated. We've started to see that. I thought Joanne Stern from the Wall Street Journal did a great story a couple weeks ago regarding some, I think it was Hardee's drive-thrus in Maine that are now, the orders are being taken by an artificial intelligent agent. But that whole concept, I think that's been pretty well framed in by investors, but that we're going to continue to see more of that. Another area is going to be around the information worker and the ability to move quickly. I was recently talking with a partner at one of the top 2 consulting firms, and he was talking about how some of their employees have a job that would take them 2 weeks, they can now do in 2 hours, and with these tools. They have a lot of support that they use with some of the people working on the ground in the U.S. with companies with a lot of support with like developers, for example, in India. And he's saying they just don't need that support. So that may be an example of an area, some offshoring that had been some technical expertise that had been outside of the U.S. that the need for that kind of goes away. And the fourth piece that I think is going to really have a profound impact is around autonomy. I've debated Joel about this, had a conversation with Joel about it. I understand that I'm in the minority in this belief, but I think that eventually cars in the next 3 to 5 years, many of them will be autonomous. Most of the new ones will have some level of autonomy features. And I think that's going to be an important way that AI is going to make our lives better. And we'll just kind of leave the AI topic with that theme. I think that AI will make our lives better. There are smart people who see that this is the beginning of the end of humanity. There's understandable reasons why they believe that. I take a different side. I think that this is actually going to enrich our lives ultimately.
Yeah, of course, there's a lot of concerns in terms of, as you said earlier, misinformation, which is a lot easier now with artificial intelligence, job replacement. I know for the ongoing strike between the Writers Guild of America and the Actors Guild and the producers, that a lot of the debate is around, of course, artificial intelligence and how it's used in movie and TV show production. How should we reconcile the possible negative impacts with the good outcomes of artificial intelligence?
I think it's similar to how we've reconciled technology progression in the past. And there have been industries that have been negatively impacted with innovation. And I think it's been pretty well framed in. I mean, you can go way back and think about people who gathered firewood were ultimately, those jobs were replaced as, there became more efficient ways to harness energy, stored energy. I think if you look at kind of the Industrial Revolution, great example of a lot of people lost their jobs because of this, but ultimately came into jobs that were probably more fulfilling based on that. And so I think that the way that I reconcile it is I think that there are certain jobs that people probably don't want to do ultimately. The reason why customer support jobs should be jobs that are done by artificial intelligence is that their turnover is high. A lot of these call centers have 30% turnover on an annual basis within their ranks. And so that to me speaks to an industry jobs that people generally don't want to do. And so I think that yes, that there's parts that are uneasy about this, and how ultimately if I end up being one of the people, I mean, investing, that may have maybe a profound impact on how people pay investment managers like myself, and is my job ultimately going to be something that is replaced by a machine? And I'm okay with that conversation because ultimately I think it's going to put me in a better place. And I think that kind of another wave to this too is I think the concept of skilled trades are going to get a boost. I think there are jobs, plumbers, electricians, people who do men and women who lay foundations for homes. These are all jobs that it's harder and harder to get people to do those, but eventually those jobs are going to become better and better paying jobs. And I think that you're going to see a shift of some of that workforce that has been doing jobs that are medium paying to higher paying skilled labor. And I think that's ultimately a good for humanity.
Of course, with artificial intelligence, there's people who are speculating and trying to find the best companies to invest in. But what about the companies, the service industries, the sectors that might be hurt worst by artificial intelligence and that kind of development?
I think the biggest industry that is going to be hurt is the traditional auto industry. And I think that the pace around electrification is debatable in the near term. In the long term, I think it's undeniable. And I think that as a kind of a co-pilot, pun intended, to the world of electrification is going to be autonomy. And I wonder how these companies are going to have a seat at the table ultimately. The AI agents, just to kind of continue on this theme of where does traditional auto go, I think a lot of the AI solutions that power autonomy are going to, there's probably going to be one or two, maybe three different solutions that ultimately are licensed across the board. And that's going to be a huge part of the value of a vehicle, is its ability to be autonomous. And so I think that you're still going to have brands. Ford's going to be around, GM's going to be around, all those will be around for a long, long time. But I think that their margins will be lower as they essentially have to outsource some of these autonomy functionality from companies like Waymo or from Tesla, and find ways to try to maybe differentiate around fit and finish and some of the personalized features. So that would be an example of an industry, broader industry, traditional automotive, that I think can be negatively impacted by artificial intelligence. We talked about some of the outsourcing roles. There are large businesses, I don't want to name the companies, but there are large businesses that operate, that provide a lot of technical assistance to development that's used in building products, tech products in the US. I think that these types of roles are going to be progressively done by more efficient people in the US. So this kind of concept of onshoring. We talked about kind of the customer support role. There are, in that case, a lot of that is done internally at companies. So the companies, actually, their margins can improve. So it's more of just a kind of a net positive. But those, I think, are going to be some of the more obvious segments that we're going to actually see, like tangibly feel artificial intelligence impacting our lives.
Of course, in terms of car automation, a big obstacle is cost. People can't afford to buy a new car, and the cars that do have automation are pricey right now. And I wonder if you have any input on if there's any movement on the cost of automated cars going down, and essentially how might that impact consumers?
So we'll look just at the U.S. market. So U.S. market is about 15% of the global automotive light passenger vehicles and car market. But just the U.S. market alone is about, the new vehicles are about 10 to 14 million, somewhere in that range. The average price of a new vehicle is about $47,000. I'll say it again, the average price of a new car in the U.S. is about $47,000. The average used vehicles trade at about a 3x. So it's about, if you look at, call it 10 to 14 million, call it 30 million used vehicles are traded annually. And the average selling price for a used vehicle is about half of what a new vehicle is. So call it $20,000. So you are exactly right, is that when we think about autonomy and think about these systems, they will be priced. The ones that are successful are going to be right around that $50,000 for the new vehicle range. But it's going to take many years for those to work themselves into the broader population of vehicles that are on the road. Last year, about 7% of vehicles in the US were electric, but there's only about 3% of vehicles on the road are electric. So I think it's going to take a long time. And the reason why I mention it in the 3 to 5 years piece is that it's going to be one of those factors where when people see it and get the value, and the value is you get more free time because you can do other things while you're in the car. And second is it's going to be a much safer experience. I think when you put those two together, even though the raw number of vehicles will be relatively small on the road in 3 to 5 years of autonomous vehicles, but the amount of airtime it gets in the media and kind of our amount of time it takes up and how we think about things is going to be relatively high. And so you will hear a lot about it. You'll hear from people who have those friends of friends who have these autonomous cars, and we'll be hopefully talking about some of the benefits that they're getting from them. So that's kind of how I see this play out, is that ultimately this is a 10 plus year shift, but it's one that is undeniable.
Yeah, I know some people who have Teslas, for example, that do have the automation feature, and they are not fully comfortable with using the feature all the time because they're of course they want to their hands on the steering wheel. How do you think you also overcome the obstacle of people not wanting to, put their driving in the hands of a computer?
My experience, I do not own a Tesla. I have tried several times the different versions of the FSD, and you want to find a way to make a human alert at driving, put them behind FSD. I mean, you will never be as alert as when you're driving behind a car that your hands will be hovering over the steering wheel, waiting for the car to do something that's unpredictable. And typically what happens is, let's say within a 15-minute driving experience, there's one time where the car does something slightly uncomfortable. There might be a lot of little things that kind of you learn about it, but one time it does something that makes the person say, this did not make me feel comfortable, therefore I'm out. I don't want to use this technology. And that's in the industry, it's referred to as the March of Nines, is that if you have something that's 99% accurate, that's probably not good enough. 99.9, 99.99999. At some point, there's a March of Nines where you get to the point where you feel that this is better than humans. And I think that the technology is not there today. I think that what we have seen, even if it's one time over a 15-minute, one engagement over 15 minutes, that's not acceptable, and that's not going to get people excited about it. I do believe that what we have seen with ChatGPT and generative AI is an example of what happens when AI hits its sweet spot. And that specifically is the amount of data to train these models. You can get exponential improvement in the model. Tesla on their last earnings call talked about a 10x increase in the next year in the number of miles that they can feed into training FSD. And so I believe that ultimately that is going to yield experiences that are much better. And just to kind of complete the thought, if the world would have tried ChatGPT in November of 2021, it would have fallen flat on its face. It came out at the right time where it was good enough, and it went up and to the right. And that's going to be the key, is that just a small amount of time, 1 year, made a big difference in terms of how people view this technology. Full self-driving autonomy is not there today. It's going to have a breakthrough in the next 3 to 5 years, and I think that's going to make those people that you talk, or help those people that you talked about being uncomfortable about it, feel much more comfortable about this. And then you have the other wild card too, is that there's other companies that could get into the mix. Still very little from Waymo. Apple has been orbiting around this topic. They want to do something in automotive. It's unclear whether or not that will see the light of day, but Apple has the potential to, just given their expertise within hardware, software, services, they have the ability to be impactful when it comes to autonomy too. And I think that's what lays the groundwork to getting more people comfortable with using these platforms.
I want to talk about ChatGPT briefly. I know you've discussed this a lot on your newsletter and elsewhere. Obviously, a lot of people are talking about ChatGPT as a means for future expansion and ideas and growth. But from my understanding, ChatGPT does not really create new things, but it rather relies on old things to run. I wonder if you had any input on can we use ChatGPT, or how useful would it be even if it is not fully generating like new creative ideas?
It's useful. I mentioned the consultants and taking 2 weeks and do it in 2 hours. You hear a lot of that from developers. Idea generation, it's useful. It's not perfect. It's far from perfect, but it's definitely useful. And I think that to get it to be more useful requires more training. And if we're going to kind of put a curve and kind of map out how this is progressing, we have usable AI today, and ultimately we're advancing towards general artificial intelligence. Maybe said different, we're in narrow artificial intelligence today, moving towards general artificial intelligence on path to super artificial intelligence. And so as I think about kind of that progression, and getting these generative AI, whether it's ChatGPT or whether it's Bing and their generative search model that they're going to be starting to roll out. I think that there's, essentially a training component to it, as you mentioned, that's been relatively limited. It's unclear exactly what the age of data that ChatGPT is using right now to train itself on. It's getting closer and closer to real time. But each time OpenAI trains their models, it costs between $3 and $5 million. It's expensive. It's expensive because it takes a lot of energy, actual pure electricity, and separately hardware that is expensive to buy. These are the NVIDIA chips that have to be depreciated over a certain number of years that go into the cost of training these models. And so that is the bottleneck to getting AI to be exceptionally more valuable to us. So we could talk about kind of the unlock. I was talking about 3 to 5 years of AI, what that means. What's AI in 5 to 10 years going to do for us? But in order to get that unlock, we got to get closer to general intelligence. And to get closer to general intelligence, the price of building or of training the models needs to decline by, call it 100x. And so there needs to be a new class of hardware. For example, we're investing in a company called Rain.ai. We initially invested in 2018, but they have a new hardware architecture that they are building that can do just that, can reduce not by 100x, by 1,000x the amount of energy that's needed to process AI or to train AI models. That's what needs to happen. They need to get the training cost down to, let's say, $40,000 to $50,000 per model, per rev. And at that point, you can get to this iteration. And ultimately, if you fast forward 20 years from now, these AI models are going to be trained multiple times a day. And that's where we get this really breakthrough in terms of the utility of artificial intelligence.
Yeah, I want to finish up talking about Apple, of course, which you talk about on CNBC frequently, and of course in your newsletter and elsewhere. When did you first start covering Apple or following it, and how has it changed as Apple has become the largest company in the world?
First started covering it in 2004, and I was an analyst, and I picked up coverage actually with a market neutral rating, and so there was you had a sell, a neutral, and a buy. I picked it up actually with a middle rating because the stock had gone up on iTunes, and my belief was that that really wasn't sustainable, that eventually kind of these other music services, MP3s, were going to compete away. And then I, shortly after that, I bought an iPod. I mentioned that because many of you probably have never heard of an iPod. But that's, and that got me thinking just this concept of how well they bring hardware and software together. This is pre-services, but that really was, I think, a turning point. So within a couple months after covering it, I started to see the light about potentially where this company could go. And during that period, that first kind of phase, that first 10 years, it was all about device sales. It was about the number of iPod and iPhone units, and that really is what drove the story. And then the next decade, it was all about what was going on in services. And now I think we're starting a new decade where it's about the active install base, which is a very different investment thesis held by the street. But those are kind of the big brush strokes about my experience in following and investing in this company.
Well, thank you for coming on PreMarket Prep, Gene. I appreciate it. Thank you again.
Thank you. Really enjoyed the conversation.